The Coin Lady channel would like to welcome you back. XRP will be the topic of interest. Our discussion will extend to include the banking industry and ISO standards. The American Bankers Association has been lobbying Congress to pass legislation regulating financial institutions' use of cryptocurrency and distributed ledger technology. March 2023. To the benefit of U.S. customers, consumers, and the economy at large, we urge Congress and regulators to make it clear that banks acting in a safe and sound manner may engage in these activities. Since banks also want to move forward with innovation, it is no longer just Brad Garlinghouse who is demanding regulations and lobbying Congress. They fear being left behind by society at large. This is the year that ISO 20022 becomes the standard. Be familiar with the contents of your hands. To put it bluntly, this could determine your success or failure. I can't stress enough that this is your once-in-a-lifetime chance. If you don't start investing wisely now, you'll never achieve financial independence. In the end, that's all there is to it. You can make a lot of money investing in ISO coins right now. This has the potential to provide you with wealth for many years to come. Quant, XRP, Stellar, Hedera, IOTA, XDC, Algorand, and Cardano are the 8 digital currencies that have been validated as ISO 222 compliant. Some will follow shortly afterward, but others will follow much later. Casper is still one of them in my mind. Dag, there's a good chance that it's a 0. Perhaps a few more instances. We can expect the emergence of additional cryptocurrencies long after the new financial system has gone live. However, if they are not practical in the new system, they will likely be excluded from regulatory benefits associated with conforming to the ISO 222 crypto list. Cryptocurrencies and tokens that meet stringent criteria have several advantages. Among these is a better reputation amongst traders and investors. Hold off on buying XRP until institutional investors start pouring in, at which point the coin will have better storage and transaction security, more liquid trading, less risk of fraud, and more trust from customers. Discussing stability is a good idea. My prediction has always been that XRP will become a highly valuable stablecoin in the future, though its price will not be fixed at any given time. It'll still go up and down, but not to the extent it does now, and it'll hit a new high over the weekend of the ISO 222 migration. ISO 222 migration, international payment transactions, and a consolidation of target 22s are all set for the weekend of March 18th and 19th as a big bang. High-value payment systems in Canada, Australia, and New Zealand are also on the move, along with the Euro 1 system, Swift XRP, and the beginning of the coexistence phase of the M2 and RM formats. Now, I won't promise you that XRP will magically rise to $500, $1,000, or $10,000 overnight. Once ISO is fully implemented, I anticipate that the value of cryptocurrencies like Bitcoin and Ethereum will rise. There has been no mention of the crypto controversy and SVB on Squawk CNBC. Now I think they are trying to force a story on us, and I don't like it. The recent failure of Silicon Valley Bank has prompted questions far more important than the superficial ones brought up by the financial press and various politicians in Washington. Most prominent are bank loans secured by questionable collateral. There hasn't been much coverage of that, if any at all, and nothing has been done about it in Washington. SVB made loans against Bitcoin and other cryptocurrencies, a practice that the bank knowingly allowed to continue before its collapse last week. Is there a reason why traditional financial institutions can't use cryptocurrency as collateral for loans? Almost funny, this is. Okay, listen up. One day, everyone will be taking out loans secured by their cryptocurrency holdings. They plan to repay the loans using the interest they earn on their holdings of other cryptocurrencies. In the not-so-distant future, we will use crypto for regular financial transactions. These authors and storytellers just don't seem to be able to predict what's going to happen. SVB, of course, gave $73 million to con artists in the Black Lives Matter movement so they could con each other. And that wraps it up. As you can see, BLM received $73 million. I have no interest in the recipients of these philanthropic contributions. However, banks shouldn't be experimenting with their clients' money in this way. There's only one reason a bank exists. Don't take any unnecessary chances with the money you've been given. Instead, put it in a safe place. In my opinion, this bank completely bungled the situation. If the bank wants to earn the public's trust, it needs to fill the position with someone who has banking experience. Banks have lost my trust long ago, so none of this will ever affect me. BlackRock CEO Larry Fink has warned that the failure of Silicon Valley Bank could be the beginning of a slow-moving crisis in the US financial system. Further convulsions and power outages are imminent. And now he's warning us about it. What will happen next is not a surprise to you. It's inevitable that additional financial institutions will fail. It may not occur immediately, but it will happen eventually. This is all leading up to CBDCs and that huge liquidity crisis. U.S. lawmaker claims FDIC is exploiting bank instability to target cryptocurrency. Here's a guy named Tom Emmer. This guy is awesome because he just comes out and says crypto isn't all bad. What we have here in the United States is a great innovation that must be protected. The United States must be allowed to prosper from this, so that it can reap the benefits of crypto around the world. According to Emma, it is deeply inappropriate to try to weaponize the recent instability in the banking sector, which was triggered by catastrophic government spending and unprecedented interest rate hikes. I wrote to FDIC Chairman Grunberg today to express my concern about claims that the FDIC is using the recent instability in the banking sector as a weapon to eradicate legitimate crypto activity within the United States. It's getting to a tragic point where some people seem determined to completely eradicate crypto in the United States. We're getting close to a point where it really matters. The United States needs to get ahead of certain things, but we always seem to have people in our own government working against us. Data suggests that this is the case. Credit Suisse's problems can be solved by Ripple, and the connection is already in place. Speculative. It's possible, though, that anything could occur. This, too, has recently been a major topic in the news media at large. Credit Suisse, so the rumor goes, is the next to go down. It has been suggested that XRP and the HODL could be used to save the bank. It would be fantastic if that happened, as relations between this bank and Ripple are already quite solid. Others, though, argue that the Saudis don't see it quite that way. Consequently, I don't think it's necessary for anyone to worry excessively about Credit Suisse. Do you get the impression that it might not work out? Simply put, the Saudis are saying that once they own more than 10% of the bank, a whole new set of rules and regulations will go into effect. That's like choosing to make $380,000 annually rather than $400,000 because the latter would put you in a higher tax bracket. Indeed, who would welcome higher tax bills? The Saudis, however, insist that the bank is as robust as ever. Let's not overreact and fuel the fear, uncertainty, and doubt. I think they are actively working to bring that bank down. Many people in the news media treat it as though it were already decided. Indeed, this is what will occur. Nonetheless, I'm not. Not in my opinion. Having Credit Suisse on board should make Coinbase's participation in this movement that much more welcome. For its part, Coinbase has filed an amicus brief in the SEC Gov v. Weiss case, urging the court to throw out the case on the grounds that the SEC is applying antiquated securities regulations to the blockchain. So it seems Coinbase is at it again, this time with an amicus brief opposing the SEC. To date, Coinbase has not included the listing of securities. We've gone as far as asking the Securities and Exchange Commission to start formulating regulations in this area. We proposed 50 questions about listing securities last year, and we're still waiting for answers. Not a single one of them has responded to us. To what extent do you agree that the SEC's lack of transparency leaves investors feeling lost and unsure of what to do next? As a result, disorder ensues. That's why many cryptocurrency startups are just hanging out in the basement for the time being. However, they're either unable to do so or unwilling to risk Gary's wrath by trying. Further, it appears that the current standards for testing are woefully inadequate to reflect advances in technology. That's how I see it, anyway. Legal reverberations. I agree with SEC that the XRP community is underappreciated, as there is a lot of internal conflict. The SEC went after Ripple, I believe, because they believed it would be an easy victory. Over 2 years later, there is still activity, and even crypto enthusiasts who do not own XRP are rallying to support Ripple. The reason for this is that if Ripple is successful, it will have a profound impact on the cryptocurrency industry as a whole. And in all honesty, I think Ripple is going to come out on top. Why XRP investors should hope Ripple will prevail against the SEC by a razor-thin margin. However, according to Varrick's analysis, the crypto industry as a whole, including crypto entrepreneurs seeking compliance and those trying to understand the rules of the road, will continue to face uncertainty or chaos until the SEC's discretion to regulate crypto is substantially constrained by the major question doctrine. To prevent years of litigation in higher courts and regulatory uncertainty, XRP holders should support a narrow victory for Ripple on the fair notice argument. So, a close win may be enough for the SEC to let it go. An appeal from the SEC could add even more time to the process should they go on to win. That's why they are telling us to cross our fingers and keep moving forward, hoping for a close victory. I really hope that's the case. I can't stand to watch this case drag on. Please just end it already. There was widespread optimism that the case would be resolved before ISO went live. After all, the judge could always issue a ruling at any time. The fate of crypto is at risk. After the failure of the cryptocurrency exchange market, stricter regulations are likely. FTX, there has been a rise in the demand for stricter crypto regulations, which investors must now navigate. The catch is that they advocate for these rules to be implemented, but nothing ever changes. The issue has been discussed in the Congress. Elizabeth Warren frequently discusses the need for regulations, but then nothing is ever done. Let's keep our fingers crossed that somebody will take the lead and propose a solution that benefits everyone. Specifically, I have in mind the institutional investors and the major commercial banks. This allows for further development of innovative techniques. We're in a critical juncture, you know. This is what I believe after observing global events. There have been announcements galore from various nations about how they're embracing innovations like cryptocurrency and online payment systems. Meanwhile, the United States has been doing nothing, allowing the SEC to do as it pleases without any repercussions. In a way, it seems like they are looking for something. They are opposed to anything positive happening at this location. They wish for it to flourish elsewhere. Biden plans to introduce new crypto tax proposals. The Wall Street Journal speculates that this could lead to greater oversight and reporting requirements for cryptocurrency holders. That's the kind of thing they are interested in now. Of course, they want to know how much cryptocurrency we have because they want us to pay our fair share of taxes, but they also care about us keeping our assets in the form of crypto. Even if Biden's proposed changes do not go into effect, crypto investors in the United States will be affected by other recent changes to tax policy. In February, the Internal Revenue Service widened the application of crypto tax rules. Those alterations mandate disclosure by anyone who has transacted in digital assets. There have been rumblings that NFTs might be subject to taxation. It's worth noting that beginning in 2022, some cryptocurrency exchanges started issuing 1099-B forms to their customers, giving crypto investors more data to report to the IRS. CoinLedger's recent third-party surveys show that many crypto investors have failed to report cryptocurrency transactions when required to do so. Fewer than two-thirds of respondents, 58%, said they would report cryptocurrency gains or losses on their 2022 tax returns. The refrain, "I won't report my crypto holdings until they come out with regulations," is still heard occasionally. Some people advise staying away from the IRS when dealing with cryptocurrency. Do what you think is best for yourself, though. That's what I always tell people. It's up to you to decide what's right. I'd rather avoid any trouble with the IRS. That's why I'm documenting everything that happens. At least, that's how I see it. There will soon be a requirement in place for citizens of the United Kingdom to report their cryptocurrency holdings on tax returns. They are interested in the total amount of cryptocurrency in circulation. Starting in 2019, residents of the United Kingdom will be required to disclose any cryptocurrency assets they may have. April 30th, 2025 is the last day of the tax year. Revenue and Customs has published a new guideline that specifies how crypto assets should be marked on the form. When selling cryptocurrency for a profit, investors must report their gains on a capital gains tax return and pay taxes on the proceeds. As a result, there is no tax liability associated with cryptocurrency ownership. The only thing they care about is what you have in your hands. And the idea bothers me because I expect the next one to occur in the United States rather than the United Kingdom. Potential U.S. gains from cryptocurrency investments will be subject to taxation. Someone, somewhere, may have tried that before, but now is the time to invest properly in cryptocurrency and reap the rewards in the form of fortune-changing gains, or you will forever regret it. I have no doubt that you will all become filthy rich, but I also know that when cryptocurrency prices begin to skyrocket, investors from other industries will flood in. I've never been able to wrap my head around that, and I think many of them will be left regretting their decision this time around, as I anticipate XRP price to surge quickly once it finally begins to rise. In my opinion, it will begin with I. The future trajectory of XRP will become more clear at that point. That being said, I'm going to end this video now. Please like and subscribe my channel. See you in the next video. Bye.